Hello, everybody. Today I'll be covering my one and only trade from today. It was gold in the New York session for 2R, so let's jump right into it. I'm going to be covering the weekly first. I'd like to start from a higher time frame perspective and then work my way down. So we hit this relevant level on gold, this little relevant swing here. And right here we actually have SMT. So you can see like this is like the only like relevant level that's like closest to price right here. And we form SMT with silver like so. This is that same weekly swing. So we have spaced out SMT. So potentially at this new swing formation that we have, we can potentially see a new phase of price. So I'll drop down to the daily. There's that SMT. I drop down to the daily. We can honestly form still continuation higher based on the previous week's close. We had SMT here with silver out of a gap. So it's like SMT fill, like so. Right. So based on this swing formation that happened on Friday, Monday expanded higher. Tuesday could have continued into this relevant swing, and then we'd work our way from there. But so we noticed that Monday opens high first. So at previous day's high, this is where we will be able to tell what is actually going to happen and what phase of price are we actually in. Because keep in mind, we just hit a relevant swing in this range, so we can expect a new phase of price. That's just kind of in my back pocket that I'm thinking. And these time frames are paused at my time of entry. Um, so we either fail to manipulate previous day's high and go for the previous week's high, or we reverse from the previous day's high and begin a consolidation phase of price. So when we form this swing formation, we actually have SMT here. When we form SMT at previous day's high and then we expand lower, that is a red flag to me. If I'm going to try to long based on this daily profile. So I'll just go to the hourly to show you. Here we have SMT at previous day's high. And then I'll mark out 1800, which is here. So based on this daily profile, we open high first into a relevant level, which is previous day's high. And then we immediately expand away from that and print gaps. This is an hourly time frame. That signifies that this is not going to be a bullish expansion day, because if this were to be a bullish expansion day, we want to see it open low, high close, which did not happen. We opened high first into a relevant level and then expanded away. So from this point on, longs are filtered out for me. And at previous day's high, it's actually a strength switch with silver. So you can see that we're bearish here. And then if I hop over to silver, I'll just do the split screen. When we look at silver, it's bearish, right? So you have to remember when I marked out that SMT, so here's like that same relevant level, right? Or I'll just draw it like here or something. Silver is all the way down here. So we have SMT like this, right? So silver is technically weaker, but it closed bullish while gold is bearish. So our high of day is a two-stage strength switch and then followed by expansion away. So when I'm coming into the morning, so the profile opens high first, previous day's high strength switch, expansion away. My invalidation point becomes these gaps right here. And you can even tell by this phase of price that we're likely to continue lower. If you look here, we're just consolidating, or you could view it as like seek and destroy, which is how I saw it, where we fail to expand past highs and lows, right? And we just keep taking out prices, highs and lows. I don't know what I'm trying to say right now. Anyways, so from this point on, it's like phase of price 101. When we expand and then we consolidate, because seek and destroy is a form of consolidation, we're likely to continue lower as long as, there's a supporting narrative that we can still go lower. And that level is the current low of the week, as our current low of the week is just like not like super relevant. And if you pay attention as well, like Monday opened high first. So when you pair that with the way that Tuesday develops, we can expect that we might actually take this. And this is actually an SMT break level with silver. So SMT break. When I go to silver, this is at the time of my entry again. This is silver's current low of the week. Here. We leave a failure swing and then we hit it. And again, this is pause at my time of entry. You can see that we're failing to manipulate this level. So I'm expecting price to come and take this low as well. Just given the profile of the day, I cannot long this. I have my validation point. It's actually a 4-hour gap right here. Okay. So I guess I'll get into kind of the 4-hour now. So we printed a gap on the way of that expansion. So this becomes our invalidation point. And then silver is failing to manipulate its current low of the week, which is this SMT break level here. So I'm looking to see how I can get on side of this potentially for shorts. So if you look here, we're bullish on gold. We're bearish here on silver. So here's our one-stage cracking correlation within our invalidation point. And then here's 10. 10 actually opens high first, takes out the previous 4-hour candles high, while silver does not. It just keeps failing to manipulate that level. So if we're going to go lower, it has to be from this point. There's no other reason for price to trade higher. There's no reason. And then it doesn't fit the profile. It's just very low probability to try to long this. So I'm trading a 4-hour C3. We have our swing. So here's C2, PSP. There's our 2-stage in our invalidation point. Lower prices must come from here, or else the whole day is probably just going to be chopped, right? So when I go to the hourly, same thing, except it's an hourly C3. Bearish here on silver, failing to manipulate this low clearly. 2-stage. So the invalidation is put in. If I go to the 30-minute, same scenario again. PSP, 2-stage, trading a C3. And I also view this as like manipulation of this range high, which is that gap. So I'm not trading away from any failure swings at this point. I think it looks pretty good. Manipulated all of this liquidity that was engineered. Seek and destroy profile. Shorts are primed for me at this point. So again, I'll remind you kind of the alignment that I'm using. Alignment. We have a 4-hour, is it C2, I believe? Yeah, C2. 4-hour C2. We have an hourly C2. And then we have an M30 C2 as well. So I'm framing a C2 reversal into expansion for this scenario specifically, because when we open high first into like the only relevant level to reverse from, it must be from this level, given the narrative that we have supporting behind this in the profile. The open high, I just keep repeating myself, but I repeat it for a reason because it's very important. We open high first, the previous day's high, strength switch, expansion. Again, you get the gist. This is consolidation followed by expansion. What comes from that? Continuation. There's the alignment again. When you have 3 or more time frames aligned, even this is like a daily C2. I could add that in there as well. When you have this many time frames aligned for expansion, there's a narrative supporting this. I mean, it's game. Daily. C2 into a reversal. I have all these time frames aligned with a key open. You just got to click the button. And that's what I do. So I go to the 5-minute. There's that gap that we're inside of, manipulation of these highs. That's how I view it. So here's 10. What does 10 do? We're fractalizing, profiling again. 10, our new 4-hour candle, it opens high first, manipulates the only relevant level in this entire range, forming our 2-stage. So this should be our invalidation point. Price should not return here, as long as assets are in sync and forming inversions of order flow. And this was my inversion of order flow that I used, the inverse, based on just how quickly it happened. And I put my stop at this high. And I was targeting the SMT break level for 2R right there. I saw longs were also taken, and here's my problem with this. I don't think it's like a bad like look from like a mechanical point of view of like this CST, but here's my problem is silver. If I just draw out like premium discount, you notice how like far silver dug into this low. This is the low that manipulated the current low of the week. When we dig in this deep, I really prefer us to like sweep this, form SMT there, and then begin to expand away, because when we're retracing this deep, it's a signature of consolidation. And if I were to get on side of longs, I would need some inversion of order flow, of bearish order flow to go higher. And that just didn't happen. Like even if I go to a 3-minute, there's really like no telling that we're actually going to displace and go back higher. The profile kind of eliminates that idea and the phase of price. But that's kind of how I've like looked at this, especially when at this point in time when silver is like starting to dump down here, as we're getting this sequence up here, and the inversion on the 5-minute. I think that this looks really good for an SMT break level. It's not like a strength switch closure or anything, but markets are in sync. If I go to Euro, we're nearly CSDing. We're inversion. We are creating an inverse fair value gap. I don't know what I'm trying to say. Same thing here. So we're primed for lower. That draw is still open on all these assets. You can see like we're just creating a lot of low resistance. It's more logical to me to trade down to these lows. And then especially this low here, even though we manipulate this little low, I view it as retracement, just based on, everything we've kind of gone over. 10 opens high first. And I take my position here. I put my stop at the true invalidation point. Absolutely should not return here. SMT break. And I'll go over how I manage this as well. So I take my position there. We retrace really deep, but this is why it's important to be covering true invalidation points, because oftentimes they will be respected if price will deliver to a point in price. So we begin to expand a little bit on the 3-minute. We print this gap here. When we print this gap, I really wanted to see price respect this, because this is 1030. So if we're truly bearish, I'm going to delete my position or I'm not going to delete, I'm going to push it over. If we're truly bearish, then we're going to respect all bearish points of interest. So that's fair value gaps, swing points, order blocks, all that good stuff. We're going to respect them. So here's that 3-minute. I want to see 1030 kind of just open in this area. And if we can expand out of here, then I can really mitigate my risk. Because I can't trail just yet. There's nothing really to trail to. There's no new invalidations set. And then once we trade into this point and then expand away, I trail here, because I don't want to see price just kind of like mess around and then come and resweep this. Like at this point, we're just going to consolidate and I might get chopped out. And, our goal is to minimize our losers as much as possible while maximizing our winners. And so, yeah, mitigate my risk there. So I'm really not risking anything at this point. Yeah, then once we got this CSD here, then I went break even, and then we hit the SMT break level. So that's my trade from today, and I hope you guys have a great rest of your Tuesday. Peace.